Good evening, guys. Wow, what a day in the S&P, right? Wow. Um, you know, real quick, one thing I realized that I made a mistake on when I was making these new, chart books for you guys, just to show you that process. When we made at first we made a crude oil book, and then we copied things over to the S&P book, and I adjusted things like my remember the time range highlight to make sure that it was set to the proper trading hours. But one thing we didn't do, and I'm so sorry, we didn't go to our TPO charts, which are pit session only, and adjust those to be purely S&P pit session hours. So I just realized that as I opened up this chart book and started looking and thinking, why? Well, this looks weird, right? So if it can happen to me, it can happen to you guys. So be diligent about setting up chart books, going through, double checking that all your charts that need to be pit session hours are set to the appropriate hours. All your charts that need to be the full Globex session are set accordingly. I always like for all my Globex charts to be set to, this is Eastern, 1800 Eastern, 6 p.m. Eastern, okay? For, standard CME products. It'll be different for Eurex stuff. And so, like we were saying, what a day. Really fantastic stuff in the S&P. I mean, if you just look at what normal days look like, and then here's where we open today, we'll split it out, and then boom, boom. A and B period are the range of, in the first hour of the day, we've done the range that we typically do. And I mean, it just gets crazier from there. So really awesome. A lot of opportunity for full NADRO methodology, which we'll get there, I promise. A little less opportunity. You guys are more limited in what you can see and do at this point. But never, ever, ever think that the basic structural stuff is just beginner, and then once you learn some other stuff, that you can forget the beginner stuff. This should be a real building block, a real foundation, an anchor of your overall narrative read and whatnot day after day. So let's look at the S&P. Obviously, we opened up, in prior value, had kind of this blow-off type top, a lot of excess at the high, only one tick of excess, so that's a weak low on that profile there. We test the upper end of quote-unquote value, even though we didn't really have good value. Sometimes that stuff just kind of still works. I'll go ahead and split this out. We did trade down to the upper end of this ledge here, value area. Let's just put it there. Find a little bit of buying, and then C period breaks down, D period retests up into this, and then breaks that overall. We'll just highlight it, the full area there. From there, it's a move all the way down here in D period, and then E period retest, and it doesn't give the clean breakout pullback. What's the expectations? What should you be looking for? Well, we know, right? If we're going to break through here, we look for a retest, and then we look for movement to some downside area. And what happened, right? We went to here, and then to here, and then to here, and then to here. So, things aren't perfect, but we're going to take a look at that, and I'm going to also give you some principles and properties and best practices for handling big increases in volatility. That's one of the beautiful things about live courses like this, is we get to experience this grind up market environment and a huge, massive, volatility spiking type environment, maybe, hopefully, here for the next couple days or something at least. That's what I'm hoping. We'll see. But that's really good that we get to see those different market regimes together. So let's look at an intraday chart, see what it looked like there. Initial breakdown, and here's where we get to that single day distribution. As you can see, the market kind of respects it. We get to one edge, come back up for really our first retest, which is kind of an advanced market profile or market dynamics even lesson for you here. This retest is the first retest. So normally we would say, okay, we made it to the lower edge of this mini destination. Therefore, there's less opportunity. That would be true if we had come in here, broken in, given a retest, and then gone to the other side. But because of the lack of the retest, because we just zipped through here, which again is a function of the higher volatility, well, now that changes things a little bit. So our high vol view on dynamics needs to be a little looser. And I actually saw a few new NADRO students in our chat that we have going talk about how they loosened up the framework a bit for the volatility. And I think that's just very impressive that you did that almost intuitively. So that's really great to see. So no retest yet, and here's where the market says, let's retest, let's make sure we're holding inside this prior value, and sure enough. So those are opportunities, more so than they normally would be after a quote-unquote destination hit. But really, where do we think this market could revert to? CVA, right? And that's what it does here. It gets into the CVA, and then we think, okay, maybe we're going to chop around in here. Nope, break. High vol, we're keeping on moving. We're going to do 5, 6, 7 days worth of opportunities in one session. That's ultimately what today was like. Now here, as you can see, again, we haven't got a retest yet, have we? We just broke down. No retest has occurred. This came close. If you wanted to say, you know what, Merritt says areas not lines, and I'm going to go ahead and take this turning point when it's close enough, good for you. Fine, that's okay. You just need to understand maybe you manage those stops once you get more advanced, that is, a little more aggressively. I wouldn't let this thing come up if I got short here and it starts to go, I'm not going to stop out up here. I'm going to be out of that trade before it ever hurts me because I know we haven't got the real retest yet. And so we're looking for that. And so, yeah. So anyways, a really big important point here is that when you have a 2-day CVA like we had during normal volatility conditions, and then you transition into a rip-roaring, rip-your-face-off volatility environment like today, it's almost like some of these smaller CVAs, if we were to kind of even condense this chart a little bit. This almost just becomes one level, right? Rather than having a level and a level where you can really take precise trades with, when all of a sudden volatility scrunches, well, really it becomes something like, well, if we get through here, we could pull back anywhere into that level and we don't really care where and go, because the volatility picture changed so drastically much. So let me delete these slides. So while I would say, maybe we don't take this as and I'm just talking to you guys at your level of understanding with what we're currently teaching you. So I would say pass on this, right? Because what does it do? It accepts back into this area. Okay, so don't take the trade yet. This one, however, I still like as a short, even for you guys. I want you to see this as an overall failure to hold back inside the CVA. If you have a bit of a loose view of the overall breakout pullback now, you know that that's still trying to set up in a general overall retest to then go lower, right? And so now there's just shorter term rotations as that general pullback is happening on a higher time frame, essentially. And what I want you to see here is just a general move that drifts up into here and can't ultimately hold and begins to break. So I really like getting short somewhere here. Even for you guys, I know we're trading 4-bar pullbacks, so maybe somewhere in here. I know it's difficult to catch those entries with such a rigid, 4-bar pullback way of trading. I know it's tough. But beyond that, where do we go? Well, let's go back and look at where this came from, right? Oh, it's just the lower edge here. Given that this area has never been traded other than the one day that we came through here, with a little bit of overlap, so you could say 2 days in some cases, or the only time the S&P has ever traded these prices before today. The market doesn't have a bunch of different references. The market doesn't have a bunch of different things it can look for. We're limited in that way, right? And that could be a good thing. I'll just make this one dotted, just because it's just the edge of the single prints from no real balance here, right? The last bit of balance we had as we broke down was from here, and then we just zip, through, and then this is just the edge of some singles, and then this is really a balance area that we can look at. So with that view, now we see, okay, getting to the edge of those singles, Law 10 compression. We break through, we get to the upper edge of this single day, come back, retest that point there, which was the point of the breakdown with the compression, which makes it even stronger than just the edge of those single prints as we talked about. And then as you know, it's a very small area. Like this entire day's value area is half the size of what we're seeing is kind of a decent normal rotation right now. So this, my friends, becomes one area, even though you can see the market bouncing around in here and respecting these a little bit. Same thing goes for this retest here. This is one of the first actual bullish opportunities of the entire day today, where we actually get into an area and break beyond on the upside. That never happened on any of these areas. We went back to rotational here, you could say, but it broke right back down, and then that's a short opportunity. Here we went rotational, and then we break above the entire zone. So again, this retest needs to be done with a grain of salt in terms of where it is within the overall spectrum of this level. We could treat it like one level, and that becomes a long entry. I hope this was helpful. I hope you had fun today with this crazy volatility. We will be introducing a lot more tools to handle this better, both intraday and other contextual pieces. So, it's just really, it's not about getting the best trade opportunities right now. It's about you being able to see the market unfolding through this lens, this view of structural narrative, and identifying areas where we hold above or below areas that give us an idea of breakout pullbacks and return pullbacks. And again, like I said last night, if you're doing that, you're right where you need to be. You're seeing right what you need to see. Let's have a look at crude oil. So, yesterday was that day one break from a CVA. Today, we gap down, right? Older structure. Let me load some more days. Huge balance here. Oops. Just doing some CVA work here. Figured it'd be good for you guys to see. This was one giant balance. But it got cut off here, but we still had the lower edge there. So really this is the structural picture we're working with for today. So just wanted to go and get you guys some CVA structures. You know, this is an experimental chart for me. It's not my real chart book, so I would normally have all that work already done, right? That's not something you're going to need to go through and do. You're going to have this as you go back and do your homework that I asked you to do. Save it, keep it, right? So now we're ready to kind of look. And you know, how's this value area look to you guys? Not so great, right? What did we have? What happened yesterday? Well, not really much balance except for here. We at least had 1, 2, 3, 4, 5, 6 periods wide of balance in this area. So one thing we could consider doing would be maybe a D period split here to get some kind of semblance of what the balance or value was there for that prior day. And that's where the singles are in between them. So we'll just do a simple split and see what it looks like. I'm not overly concerned about it, but in general, that's a much better value area. But what my eye gravitates to here, again, take a look at this, and it's confluent. It's right where the CVA is, the CVA high over here. Take a look at where that is on this profile. It's a ledge right here, and the ledge is there because the CVA was already there. So instead of focusing too much on this value area, which has its own merits because this is a semblance of balance here, this ledge and the upper CVA that it's confluent with makes a whole lot of sense. So what happened today, right? We're headed down, and we break and we hold below this CVA. So at this point, what's our bias and what's our thinking? It's bearish below there. And we're, you know, maybe we're asleep at this point. I'm just saying this is what the bias would have been. And so now we're thinking, okay, we'll revert to the next area. And then it's a decision. Can we hold inside there and look for the full destination, or does it fail? And then we look for the essentially a breakout pullback going the other way. And that's what we get, right? It fails. It doesn't hold inside here. And in fact, we start to hold above. And that happens at multiple places. Okay, what happens now? Okay, we accepted back into this. The question is, are we going to hold inside this CVA and work our way across? Or is it going to fail? And you had to be quick on this one, right? It wasn't easy. You didn't get a 4-bar pullback, but that is a form of a trade that we'll look at. It's what we call micro. It's what we call out of rhythm. But it is something that can make sense. Other than that, now we're here for another inflection. Are we going to hold and break and accept through? For example, just to kind of throw some things out there, if we were really, really bearish, we might see this, just like we saw this as a potential short, we might see this as a potential short. But again, you got to know it's a little bit flawed, it's a little bit micro. And another thing to consider, and obviously if we finish this out, it doesn't hold, micro little retest there, no real return pullback here, but it ultimately does go to the other side. One thing to keep in mind is that when you have a day that's just going back and forth and back and forth, by the way, between two CVAs, in this case, old CVAs from July. It's currently September. They don't carry as much weight. What's the recency of those? Not so recent, right? What's the recency of not only condition shifts, but like fresh condition shifts? As in, we didn't just try to do the same exact condition shift that we tried an hour and a half ago again. You know what I mean? This market, you need to understand, is coming once, like, these are all kind of the new opportunities. But then once we get to this point here, we're now interacting with the exact same level we got through interacting with, and now we'd reacted with this one. So this one got interacted with, then this one got interacted with, and now we're back to point, A again with the original one, and then this was back to point B again, and this is back to point A again. These are not fresh shifts that the market's really going to care about and give you great trades and those type things on a more consistent basis we look for. So it's a little bit, we're getting into some more advanced kind of how good is the narrative topics here, which I think is important after you get a couple days of building CVAs and seeing breakout pullbacks and return pullbacks occur on your charts. So keep that type of stuff in mind. What kind of features do we have on today's profile? We did come up and just barely clean up that. It was not a poor high at the time, but we did continue to put excess into the highs today. And we have a 3 wide poor low. So that's going to be something if we see selling in the overnight session, if we open up here tomorrow and maybe get a chance to fade this upper end of this again in a rotational prior value situation. And I know value's not great here, but we did balance today overall. It was just a wide ranging balance rather than a tighter balance. But the poor low is a feature that would be on my radar as a place to look to take some profits if I do get into a short either from here or here, and then see what happens. Do we wick that and start finding buyers? If so, be a good place to exit, or do we take some partial profits here and it keeps going? We'll look for that. But either way, the auction is not complete on a pit session basis, which carries a lot of weight from my experience. Not complete to the downside here. So maybe what that means is if we actually got either a short here tomorrow, maybe a short from this upper end here using the CVA levels again, but maybe we break down and get a weak pullback into this CVA or maybe prior value, and we get a short that first target could be taking out the poor low, and then ultimately around this 39.90s is the lower edge of some significant structure here. So we'll look for that as well. All right, have a great night.